Welcome everybody. Welcome to another episode of the First Fruit Stock Club. Welcome. Got to get my Jay-Z on. I am Donald Green. I am your host of the First Fruit Stock Club, host and founder of the investment club. Man, I hope you guys are having a great week so far. And I know there's definitely a lot of things going on in the news. Negative news, in regards to the government shutdown. To all my government workers, man, guys, just stay positive, right? And so let's get right into it. So the Dow Jones Industrial Average. So today's topic. Let me get back to today's topic is how do we make money in a volatile market? Like, how do we make money in a volatile market? How do we do that? Right. And we're going to discuss that today, different ways. All right. So let's just get into the markets quickly. The Dow Jones Industrial Average for the week. I always do a measurement I always do um, a view of the week, right? From last Thursday to this Thursday. What did the market do? All right. So the Dow Jones Industrial Average includes all the industrial companies in United States, the largest industrial companies in the United States, was down 599 points since last week. All right. The S&P 500 was down 119 points since last week. And the NASDAQ was down 504 points since last week, right? And it's important. So I want to look at some levels here. It's always important for us to have levels. So I marked off some levels here. So the week low. And so what I've been noticing in the market is the market has been trading really on a weekly. Now, when you look at the stock market is a time machine, right? And for the most part, it's an optimistic time machine, meaning the goal of the stock market, it wants to be positive moving forward. But sometimes it moves backwards. And usually if it moves backwards, it's usually negative, right? Because the stocks have gone by and they're testing levels that it passed before going up. All right, everybody get that? Time machine going backwards, right? And for my financial people, you have compounding forward and discounting backwards, right? Compounding forward and discounting backwards for my um, for my financial people. So look, so like I said, it moves back and forth. So what happens is you need to know what levels you need to be worried about. Because yeah, sometimes everyone said, well, don't worry. You definitely have to stay the course. You definitely have to be a long-term investor. But there are some levels that you need to look at, right? Some levels that you need to look at. So the Dow Jones Industrial Average, let's go back to that really quick. So the Dow Jones Industrial Average, um, and we look at this is a week view, and on the week view, the low of the week was at the low of the week is so this is a level. So if the Dow Jones goes below this level, you need to start having a different strategy. But right now, it's been trading above these levels. Okay, so the first level is 45,520.65. All right, I want you to write that down. 45,520.65 for the Dow Jones Industrial Average, right? And that is, if you look on the screen here, right? You'll see basically V's in the screen, and the V's are lows that the stock market has reached, or the Dow Jones has reached within this week. So 545.2065 was the low of and the first low, right? And basically it happened after uh, Trump came out and said that it's going to go back to thinking about tax, about bringing tariffs back for China, the 100% tariffs again. He's back at that again. All right. So, but it has not tested that low, right? So we don't need to panic right yet. Okay, we don't need to panic yet, but we but we do just need to be aware of where we are in the market. So we're just really in a choppy market. So it's going to test the high, and it's not testing the low. That's the most important. So it's like touching the high and it's bouncing off certain levels in the high and coming back down and settling within that range. All right. So that's what we want to look at. We want to look at the range and we want to make sure it doesn't go outside of that range, because if it goes outside of the range, then we go from weekly. Remember, the time machine always goes backwards. We go from a weekly time machine, because right now it hasn't broken the weekly range, to a monthly range, right? And the monthly range is a whole nother range, and I'll probably get into that next week. But we always want to be aware. All right, so let's go to the next one. S&P 500, right? For the week, down 119 points. The level of the S&P 500 we want to watch is 65, 64, 20. We'll say it again. 65, 64, 6,564, 20. All right, once again, 6,564, 20. We want to watch that range. That is the low for the past 7 days. All right, so once again, if it goes, it stays within that range, it stays within the week. But if it goes outside of the week, then we have to go look at the monthly and see where it's going to be. It's going to create stability, or is going to create stability. And right, we're always looking for where a bottom where the market will create stability, meaning that it's not going to trade below that bottom. But the monthly chart has a different bottom, right? I won't go into that. So we have to watch that. All right, so let's look at the NASDAQ, right? The NASDAQ, of course, I said, was down 504 points, 55 points. The level we want to watch for the NASDAQ, if it goes below this level, we will have some concern, is 22,255.61. That's 22,255.61. We want to watch that level, okay? Once again, the time machine can stay within the week, so basically from Thursday to Thursday, right? If it stays within the range it had between those two Thursdays, we're fine. From last week. That's why you got to watch every week. You got to be here every week. All right. So, but if we go below 22,55.61, then we have to go to the monthly, right? We have to go to the monthly, right? And then the monthly is a different low, right? So therefore we have to have some concern. So it's been, the stock market's really been trading in a range right now. It hasn't tested that low from the first day when Trump came out. But you don't know what's going to happen. Like I said, we were one tweet away, and as I discussed, if you've been watching me, I'm discussing, keeping cash on the side, and you need to. There are some things I posted, so you got to follow me. Things I've posted that you need to watch and you need to be careful. And this time I was telling you, be careful during this time, right? Be careful and have cash on the side. So I am putting money to work. I put money to work last Friday, right? I put money to work. So my strategy is, what I'm doing is on these dips, I'm buying, right? I'm buying on these dips. And I think that we're going to have some volatility, because think about it. The market is like a human being running, right? And when the market goes up, it's running uphill. It's running uphill. And after a while, after you run uphill for so long, you have to take a break. You have to take a break, right? And right now it's taking a break. And right now, I think it's consolidating because, like I said, That's what happens when, it goes up, goes down. Some people are exiting some plays, right? But it's not exiting plays where it's bringing the market down, where it's not coming past, it's not breaking the low of the week since last week, right? So that's what we have to be concerned about. So I think we're okay in that standpoint. So once again, what I'm doing is buying on low days. I love buying on low days as long as we're in this consolidation period. Now, one tweet can come out and we could break that weekly. And so then I'm concerned. So then I'm going to probably raise some more money in my account. How do you raise money in your account? Well, I have positions where I need to raise. And not only that, right? And I'm going to tell you the real strategy for making money. And you got to stay with me, okay? I'm going to tell you at the end, how do you really make money in this market right now? Right? So as it's going up and down, then that's where you can put in. Now you have to watch the daily chart, right? See, so as you look on this screen, you see the daily, the weekly, the monthly, the 3 month, 6 month, and a year, right? So during the day, we're watching the daily, right? We're watching the daily, seeing what the market's doing, and it's crazy. It's like a suckers game going on, right? So the futures is up. Futures are basically how the stock market will be in the next day. How the stock market will usually open the next day, and that's determined by the futures, which are usually at night, right? If you A great channel to watch if you want to get futures is to watch Bloomberg, right? I watch Bloomberg at night and see what's going on with China and Africa and the stock markets in China and Africa and in India, all right, and seeing how they're trading. And it also has some information about the futures, the Dow Jones Industrial Futures, the Nasdaq, and the S&P 500 futures is telling you how the futures are trading, and how the futures are. The futures are up or down. That usually tells you how the market will trade the next day. All right, but here's the game that they play. So look, the futures will be the futures. Sorry, the futures will be up and during midday. It's like, oh, you feel like you can relax. And then boom, like this drop right here. See these drops in the chart? You get relaxed, you think you're gonna have a good day, and then boom. And then you really get hit with the uh and the mark they this market just starts selling off, right? So you have to be patient, watch the daily, and what you're trying to do is you're trying to find the low of the day. You're trying to get to the low of the day. And what happens is the market will usually bounce off. We usually find a point of stability and it'll usually bounce off that point, right? And once it bounces off that point, then you can start putting some money to work, but you got to be patient during the day. But you have to watch it, right? Watch the day, and we're buying there. And I buy three things. I'm looking for three strategies. Okay, I'm looking for adding to my long term portfolio. I'm looking for options, right? I'm looking to add in my dividend portfolio also, right? And let me tell you, one of the greatest strategies is to have monthly income coming in, because what happens is stocks pay dividends no matter what's going on, right? Mostly, they are so let me get to the disc. Sorry. So this information provided in the First Fruit Stock Club for educational and informational purposes only and should not be considered financial investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial regulatory authority. Investing in stocks and other securities carry risk, including the potential loss of principal, past performance, not indicative of future results. Always conduct your own research, and conduct with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates, excuse me, do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that that you are responsible for your own investment decisions. All right. So, all right, let's go back to the Nasdaq. So, what we want, right? And man, I almost forgot where I left off. But yes, the strategy that we want to have, right? And the strategy I employ is definitely trying to buy. But look at these dips are so quick that it's bouncing so fast, right? But you don't have to be exact. If it's bouncing and you're trying to, you're waiting for it to get to the low of the day and let it stabilize a little bit, and then you buy a little bit. You don't put chunks and chunks down, right? But you buy a little bit here and there, right? And as this market is going down, because what's going to happen is this will pass like everything else, and we will enter the Christmas season, or the what's usually called a Christmas rally, right? Everybody's in good spirits, and the stock market usually, and doesn't always, okay, nothing's ever guaranteed, but the stock market usually performs pretty well the last few months of the year, just for the fact of money managers are trying to make their bonuses, so they have to be invested, right? And he's investing to the year, right? Market um, has a lot of liquidity, right? And the volumes are usually high, okay, which is good. High volume trading volume means that there's a lot of people out there in the market. We want a lot of people. A lot of people creates liquidity in the market, and that usually equates to stock prices rising. All right, so how do we make money in this market? I'm finally here, okay? I'm glad you stayed with me. But how do we make money in this market? My strategy that I always teach in the club is boom, is that we love volatility. I mean, we don't love volatility, but we like volatility. And it's good for your portfolio, right? Especially what I teach, because what we do is we have dividends coming in on a weekly, on a daily, and on a monthly basis, right? Right. And we take our dividends and we buy growth, right? Growth at a discount. We're always trying to buy growth at a discount, right? Best companies in the world, right? And um, I give a list in the club of what I like. So think about it. And look, I have a free club with a free offering of 7 days. If you don't like it, you can leave. That's fine, and find someone else. But it's free for 7 days. You come in and get some information on the market. I talk about, I discuss when I'm buying, and different strategies to go forward. So, man, that is it that I have for today. We're just watching markets. We continue to put money to the side, and we take advantage of this because these down these many corrections, or in the market, and opening down or down 500 points, there's opportunities there. You can get some discounts in the stocks, right? That you've been waiting for a while, right? But the thing about it is you have to invest, because what happens is that people say, "Well, I'm gonna wait till it's a big crash," and the big crash never comes. Or you're not going to invest in a big crash because you're going to have another excuse, right? The excuse is, what you have to do is you have to execute, right? And you execute by buying small amounts in the market, and um, when the opportunity comes. And what happens is that when you buy these stocks at a discount compared to what they were trading, growth stocks, right? Or you can buy the indexes, right? I love buying the indexes. And buying those at a discount, right? Over time, you do well, right? Over time, the stock market has been one of the best vehicles for generating wealth. But taking the growth, and then what happens is the growth grows, right? And then you can move to the next stage of my strategy, which you have to come in the free club to find out. All right. So that is it. I have for the week. Man, I hope you guys are enjoying your week so far. Um, I just say that, one thing is that, you have to stick with it, and you have to, the stock market allows you to improve your relationship with money, right? And one thing we do, and one thing I teach is, not to trade just to have more money, but trade to give money away, right? A lot of times it's hard for us to give because, we feel like, what we have, we don't know we're going to have more, or, we spend all of our income, right? And the system is not made for that. And then the system, if you spend all your income, just the system will punish you for that, right? That's why you give a portion away, right? You to a charity or whatever that you like. We invest a portion, and what's left over, then you spend, and that's your real budget, right? So, with a philosophy of investing to give, right? So we invest, we create opportunities in our account, and then we give some of our profits away, right? Because we need to continually improve our relationship with money by giving it away, and it teaches you that you don't need all of it. You don't need all of it. And if you do think you need all of it, and you have to spend all of your money, then you're doing something wrong, right? Because it's not really made for that, and the economy punishes you for that, right? If you spend all your money, you don't have any to invest or any to give, right? You will be punished for that. All right, this is it, man. Thank you guys for joining me for another episode of the First Fruit Stock Club. I will continue to monitor the market, look at those levels that I told you about, and if it reaches those levels, then I'll be on here talking about what are the next levels that I'm nervous. I'll probably stay with this every week to levels that we need to look at. All right. So look, have a great rest of the week, great weekend. Man, tomorrow is Friday, First Fruits Friday. And remember, the the first thing you do with the first dollars that you earn are the most important, and will determine the future of your finances. Thank you very much. Until next time.